a question, for our followers out there that are math junkies, that are like the numbers, and like you are all about the numbers. Could you give us an example of what someone who is single, they purchase a home, what kind of like tax strategy, what tax savings or refund can they kind of expect at the end of the year? For someone who hasn't filed their taxes with a home, what will their taxes look like when they file?
Yeah.
Give us the numbers.
Totally. So most people start out with renting.
Yeah.
For me personally, the rent started at like, $1,900 for a one bedroom.
Sure.
I was single at the time, filed my taxes, and then I'd either pay $100 or I'd get $100 refund or break even. There really wasn't much any tax savings or any way to maximize my refund just because I'm renting.
Right.
I'm spending money on the rent. And then again, I moved from a one bedroom apartment to a two bedroom. So the rent increased maybe from $1,900 to roughly $2,300 to $2,400. And again, I could pay $10,000 in rent and there's no tax benefit.
Yep.
So it's really just breaking even, or maybe I'd owe a lot. I'd owe a lot of tax liability, maybe like $3,000 break even, or get a $3,000 refund based off renting.
Yeah.
So eventually, you're not receiving any tax benefits from renting, and as you rent, my rent was increasing. So I didn't move. I just stayed in that same two bedroom apartment, and over 3 years, no tax benefits. My rent increased from like $2,200, $2,300, $2,400.
Yep.
And then I personally thought to myself, why am I paying rent? I'm not getting any benefits from owning a home, whether that's equity, mortgage deducting the interest or the real estate taxes paid. My tax situation, I'm just really limited. I'm not able to maximize my refund or minimize the taxes due. So right when I would reach the $2,500 mark, paying rent, that's when I took a really hard look at home ownership, and I really asked myself, why am I paying $2,500 in rent when I could be paying $2,500 in a mortgage payment?
Yeah, exactly.
And then build up the equity, and then get an immediate tax benefit every year by increasing those itemized deductions associated with the home, and then increasing my refund. So
Give us an example. Yeah.
Yeah. So
like this happens in so many scenarios where we're renting, and your rent is a liability. It doesn't go anywhere. There is no tax benefit, as you mentioned. And meanwhile, every year you're kind of subject to a increase in your rent. You can't ever really hold that monthly rate for your rent or your mortgage and your living costs. That just keeps going up, and there's no matter how much time goes by, you can't really just like secure one monthly payment to take advantage and secure your like financial security.
Yeah.
So at that point, at $2,500, like that's it. I'm like, how can I do better? How can I save better? And how can I maximize my tax credit? Tell me what you did.
Yeah, so that's a really good segue, really good summary of what I experienced personally. So then, I went to the bank, showed my tax returns, got approved for a mortgage, and I was paying maybe $100 or $200 more in rent, in mortgage payments, than rent. So the trade-off of paying $200 more for my mortgage, I built equity, and I was able to deduct the mortgage interest, and so paying $200 more for those tax benefits and future benefits, it just was a no-brainer for me. Once I started paying mortgage of like maybe $2,700 to $2,900 a month, I immediately secured equity, meaning that when I do sell the home, all that money is going to be mine with the equity.
And even if you're paying $100, $200 more, that money is technically yours because you're getting that back in equity.
Yeah.
And then when you do sell it, that's money that you also get back when you sell it. You know, so it's almost like a win-win. Whereas when you rent, it's just, and then you it's gone forever. But as far as the mortgage interest that you were able to deduct at the end of the year, what did that look like? I mean, you said you were paying like $100, $200 more.
Yeah.
How much was that? How much did that kind of translate to at the end of the year as far as mortgage interest that you were able to deduct from your taxes?
Yeah. So at the beginning of home ownership, mortgage interest is going to be high. The government recognizes that. So roughly, personally, I was paying between $13,000 to $15,000 mortgage interest every year. And then I was paying the real estate taxes, which was roughly about $8,000.
Yep.
So it's going to depend on your county, your state.
Sure.
But in this type of area, you're going to be paying real estate taxes between $8,000 to $12,000. And because those are expenses, the government recognizes that and wants you to deduct that on your tax return. So as you increase your expenses, maybe that's $20,000 of expenses. My refund increased by, I don't know, five to 7,000.
Wow. So before you're getting like maybe 100 to maybe 3,000, and you increase it from 5 to 10,000.
Yeah. So me personally,
incredible.
Each person's going to be different. I have a wife, I've got 2 kids that play into the tax scenario. But just generally speaking, for the mortgage interest, $13,000 to $20,000 it is immediate tax benefit on your tax return.
That's fantastic. So I mean, just those are your numbers. For anyone that is in that rental cycle, and the average for home ownership, especially nowadays, is about 5 to 7 years that most people stay in their homes. So if we're thinking about renting for the next 2-3 years, think about home ownership. Think about the cost and the equity that you'll get back, and that money that you'll get back as far as tax shelters, refunds, or just deductions that you could take at the end of the year. You may not see it at the beginning. It's not an instant gratification kind of thing, but it's a delayed gratification. And with Elliot, at the end of the year, he'll put the art piece together. He'll put your taxes together so that you are maximizing those. He said it himself. He lived through the scenario. He's done it before, and he was able to have a strategy where he was getting 100 to maybe 3,000 in tax returns refunds back, to 5,000 to 10,000. Now these numbers are just examples, but you can see the difference of what home ownership can do, and that money that you pay each month for your mortgage, again, goes back to you, and you build your equity year after year. Whereas in renting, it's just you pay the rent and it's a liability and it's gone forever. So thank you for sharing your numbers, your personal experience, and that first year of home ownership. I think it definitely puts in perspective for anyone out there that is a business owner, is single, or thinking about taking that first step, what it would look like at the end of the year. And sometimes that's all it takes, just to paint the picture of what it would look like at the end of the year for our clients to take that first step. So thank you so much, Elliot, for sharing your experience, sharing those numbers, and helping our client take that first step.
Yeah. Just 2 more points that I have.
Yes, please.
Is as a as a new homeowner that's on the market for a house, it can be emotional. It can be a huge purchase, but I wouldn't look at it as a cost. Even though you're paying all these the mortgage interest and the real estate taxes paid, don't look at it like a cost. Look at it as a tax benefit that you'll get at the end of the year in the form of a refund. And then for me personally, when I did sell my home, I had a check for about $400,000, and it was tax-free, and I reinvested it into another home that was increased my quality of life. So I didn't get $400,000 immediately. I paid into the home. It was an asset, increased the equity, sold it, had a $400,000 check, and then bought a bigger house. As my family grew.
That's perfect.
Yeah.
And that's typically the life cycle of clients, that the first house that they get isn't necessarily their forever home. They usually start a little bit smaller, and a starting home, maybe 3 beds, 2 baths kind of ordeal. They build that equity for 5 years per se, and then they take the equity and buy your forever home. That's exactly the life cycle that a lot of our clients do. And like you said, that $400,000 proceeds you use to pay down your forever home, the home that you actually wanted. And you did that by making that decision that you're like, okay, after $2,500, that's it. I'm not paying any more. I'm going to stop. I'm going to use that money, build my equity so that I can get onto the path of home ownership and get to that home that I actually really want to have for myself and my family. So, beautiful story.
Yeah. Thank you for listening, and yeah, this has been great.
All right. Thank you, Elliot. I think we're just gonna.
Okay. Nice.